That stat shocked me.
Yeah.
A return to the glory days.
There's a lot going on for the dealers to get their head around.
Hello and welcome to the Talk Auto podcast. Every month you'll be joined by me, Ben.
And me, Holly, as we speak to industry experts about all the latest trends, developments and stories in automotive. Whether you're an OEM, fleet or retailer, we've got something for everyone.
Now for a little bit more about us.
But not too much.
True.
Not too much.
Between us, we've got about 10 years of automotive experience, ranging from working within auction houses through to working with software for cutting edge finance journeys.
And we are super excited to get to know all of the experts that are coming on the podcast. So remember to follow, like and subscribe to all of our channels, and you can keep up with bite-sized conversation bits in our news and views section. So thank you very much for listening, and let's dive straight in.
This week, we'll be giving an overview of the automotive market before we do a deeper dive into market trends. But first of all, let's introduce our guests.
So lovely to meet you guys. We've got Philip Nothard from Cox Automotive, who's our Insights Director, and Director Motoring Research Editor at Auto Market Insight, Richard Aucock. It's lovely to meet you both. Thank you so much for being on the first episode of the podcast.
Thank you for having us on.
We're very excited to dive straight in. Just before we do, it'd be great to just have a quick insight into your roles and your journey in automotive. Phil, should we start with you?
Okay, I've been in the industry a while, in excess of about 35 years. My background, 8 years now, at Cox Automotive. Previous to that, Cap HPI, so very sort of comfortable in that valuations and data marketplace. And prior to that, the rest of my career in the retail, the dealer sector. So it's a few years now since I was about 17. It's been a while.
A while, definitely a while. And Richard?
I've been a motoring journalist for around 25 years now. I'm director at Motoring Research, which is a content agency and publisher. Specific for this one, I'm also editor of Auto Market Insight, which is a monthly print title for retailers and leaders in the automotive industry. And I also edit Auto Sunday, which is a weekly newsletter. As the name suggests, it goes out on Sundays at 7 p.m. And that is a digest of what's happened in the previous week, any developments over the weekend, and also, importantly, what's coming up for the week ahead. So it's all automotive focused, and it's very, very interesting, particularly at the moment.
Yes, definitely at the moment. I think it's an interesting time for automotive. And I think this episode being market trends, key market trends, looking at the automotive landscape, you're both so well positioned to be talking about this. Definitely.
So I think, Philip, you mentioned, your main role is Insights Director at Cox Automotive. There's the Insight Quarterly that you publish. Is there anything that you can sort of share with us that came out of the latest issue?
Yeah, I think, as it says, it's a quarterly insight report. It's where we reforecast the new and used car market and the introduction now of the LCV, commercial vehicle market, in the latest edition. We've also got people like ICDP in there looking at the European dealer sector of what's happening across Europe and with the dealers. We've got a little bit of consumer insight from Regit, who have surveyed and looked at that consumer market as well. But I think key at the minute, as you're saying there, Ben, that there's a lot going on in the sector at the minute, particularly for the new and used market in the UK. As we get things like the ZEV mandate, we've got the new entrants predominantly dominated by Chinese OEMs in the main. You've got the ECG grant that's been recently introduced on the 16th of July that's still transitioning through, and what does that mean? And at the same time, you've got consolidation across the dealers, particularly the franchise dealers, and international operators now entering the UK as well. So there's a lot going on for the dealers to get their head around, as well as trying to fight and battle the economic climate as we find ourselves in at the minute as well. So it's kind of highlighting a lot of that at the minute. But I think the key at the minute is, we are forecasting a 2 million new car market is one of the probably key takeaways. We'll get onto how that's made up and why. And a 7.7 million used car market, which, all in all is quite a positive message for the sector in terms of recovery.
Definitely. And I guess, Richard, it'd be interesting to have your insight as well. If you're producing these weekly reports, what would you say are the kind of key headlines from your perspective? Or would you kind of agree with the positive kind of trajectory of the market at the moment?
Certainly, I'd agree with some of the points that Phil brought up. certainly in recent weeks, it's been the electric car grant, how that's been developing, the manufacturers and the gradual introduction of brands as we go there. There's also been talk around employee car ownership schemes. The consultation closed in September. So that's been certainly a talking point, and also the general economic picture. We're seeing new figures all the time, and that's certainly something that retailers in particular keep a very close eye on, because it very much is a measure of consumer sentiment at the end of the day.
Definitely. It's interesting that you mentioned the employee car ownership scheme, and we've also recently had the Supreme Court ruling as well on car finance. How do you think that's kind of influencing consumer behaviour? Do you think it's affecting retailers' fleet? How do you see those two particular rulings or changes affecting those segments?
I think the two separate things, the Supreme Court ruling around the discretionary commission, it's taken a long time for that to get to a conclusion. I think positive, there is a conclusion now. We've got some guidance as to what will happen from the FCA. We're now waiting for the finer details in terms of, the redress scheme and when it will start. I mean, the FCA is saying 2026. What they haven't said is when.
January as a potential.
They kind of said when in 2026. They won't be sort of pinned down onto when in 2026. But, predominantly it's, that has been slowing down some of the acquisitions in the sector, because you're not quite sure what you are buying in terms of risk and goodwill and exposure when you're buying a dealer group, when you've got this discretionary commission redress scheme in place. So I think positively, it's taken too long. We've got a decision. There is a process being finalised now. So that's kind of happening. The big question is going to be is how much financially impact it's going to hit in 2026 when it does come and defined, and then how much it hits from the finance lenders into the dealer market, whether there is a pass on into the dealer market, which we're not quite sure of yet.
That was going to be sort of one of my follow-up questions is, how is this affecting the sort of retailer-customer relationship at the moment? We're obviously filming this in September. I don't know if there's any kind of insight that you guys can give us to new car registrations and how the market's looking at the moment as we've got the plate change with all that.
Yeah, I think the discretionary commission, it's a good thing for, when at the end of the day, from a consumer-dealer relationship, when it first came to light, there was a bit of a panic, but the lenders and the dealers got behind it, I think, Richard, fairly quickly. They got the process in place. They got the paperwork in place. Code weavers from a Cox Automotive perspective reacted very quickly for their customers, and everything seemed to carry on. So, the good operators have been sort of operating under a fairly standard finance commission process for a while now. So I don't think that is a bad thing, if I'm honest.
Yeah, I think the general message from a consumer viewpoint is that there's clarity finally in terms of the responsibilities, and the two, it was a 3-part case and 2 of them were dismissed by the Supreme Court. So that is reassuring for consumers that there's no big story there. The issue is around the redress, and there's still no real clarity around that. But the FCA have said probably £950 maximum. So that kind of gives consumers an idea of the sums that they might receive. It won't be many thousands, and I think that does help with the clarity as well. But going back to what Phil said, retailers have been working in a very professional way ever since all this began, disclosing commission, making sure that the paperwork is all nice and clear and taking people through it. And I think from a consumer viewpoint, you'll have an even more professional experience at retailers now than perhaps you were in the past. So it's only a good thing.
Yeah, I was just about to say a positive turning point in that respect. Yes. From a consumer perspective and transparency, I think is definitely helped with that, hasn't it? Yeah, I think that's a really interesting point, actually.
Yeah, and it's sort of led on, hasn't it, from the changes that came in a couple of years ago when actually discretionary commission was sort of outlawed, so to speak, by the FCA. So, yeah, it's just a continuation of that trend to be more sort of forward-thinking, more customer-centric in the approach.
Yeah. I think it's also, we didn't quite touch on it there, the plate change in September there. What do you guys think that's going to have an effect? Obviously, we've discussed kind of the past quarter, the past few months. how do you think going forward, that plate change? I know you've mentioned OEM pressures there. You're smirking a little bit, so maybe we know your response. But what's your take
question.
on that?
I mean, there's a lot going on, and September. Some of the OEMs are in a good place in September. They entered the market with a reasonably strong order bank. Other OEMs, not so much. You only need to look at year-to-date market share of some of those manufacturers, predominantly the traditional manufacturers. You want to look at it in terms of traditional versus the new entrants. Some are losing quite a lot of market share. So there may be, as we get towards the end of the month, what we call tactical or pre-registration activity that we saw in June, and we refer to that in the Insight Quarterly, where 30% of registrations were taxed and registered on the final day of the month.
That stat shocked me. Shocked me.
Me too.
Yeah, well, there's a lot of those
crazy.
vehicles still in the marketplace. So you only need to look at the marketplace platforms, and you'll see a lot of 30th of June vehicles with delivery mileage on them for sale. So we know there's been a heavy activity around that pre-registration tactical stuff.
And it's something that we do monitor in Auto Market Insight. We've got a series of KPIs, and one of them is essentially pre-registered cars, cars with fewer than 100 miles, less than a year old. So we keep tabs on that and monitor how it changes and how it is increasing over the months. It's always interesting to look at that on a quarterly basis as well and see how it has changed.
Yeah, and I mean, you talk about September, July, August, there wasn't really any very low volume months. They're not really under the pressure. The pressure is on September. Yeah. For a lot of the OEMs, September is the definer of where they're going to finish for the year now as we enter into that fourth quarter. The activity tends to be at the end of a quarter. So you get your June, and now we sort of nothing really tactical wise, no pressure there. But a lot of the OEMs will now be looking at where they are in terms of the ZEV mandate or the VETS mandate or the CAFE target, depending on where you look at it in terms of the international and global. But they'll be looking at that. They'll be looking at their market share, and then they'll be deciding how fast do they go at the remaining quarter and how much they need to do on the last day or the final days of September.
Yeah, I think we saw of that 30% of vehicles that were registered in June, I think, 25-30% of those were EVs as well. So it does feel like there's a little bit of sort of tactical movement happening there, definitely. Well, that brings us nicely on to talk about maybe what you've been up to this week, Richard. I know you popped over to Munich for the Motor Show.
Indeed, headed over to Munich for the IAA, and it was a pleasant surprise. So in the years post-COVID, motor shows have been a bit quiet, been a bit thin on the ground, but also the ones that have taken place have been a bit quiet. This is a return to the glory days of motor shows almost. It was a packed show. There were lots of OEMs there. There were lots of executives there. I kept bumping into people as I was walking around the halls, and it had a really good vibe about it. So I was very, very pleased and had a very good 2 days over there.
Yeah, that's really interesting to hear, actually, that you say it's such a change from previous years, post-COVID, and it's kind of boomed. I guess one of the questions maybe, is there any indication from OEMs there, or did you hear anything while you were there about what directions OEMs will be going in light of kind of the EV boom, these changing circumstances, new market entrants as well? I think we've briefly touched upon it there, but it's a huge topic at the moment. The kind of mostly Chinese EV market entrants, and how they're going to respond to those kind of pressures.
Yes. Well, on the established OEMs, it was interesting that they have gone big at this show. So Volkswagen went big, BMW, Mercedes-Benz, they all had debuts. They all had large stands there with new product. And it was very interesting to see the impact that was generating. But it was also interesting to see I think the figures are there were 10 European brands there, but 14 Chinese brands there.
Wow.
So Chinese outnumbered the Europeans in their back garden. And also fascinating, the Chinese brands had also brought along many of their suppliers as well. So they had the Chinese exhibits there, but also the suppliers had huge stands as well. So it was almost an entire takeover of one side of the Munich Exhibition Centre. It's fascinating to see.
That is fascinating, actually. I
Yeah.
know we were talking yesterday about Cherry just coming into the UK, didn't they? They launched in August, and it just seems like every week we're getting a new car brand entering the UK market.
It feels like it as well. Yeah, because doing what we do as journalists, you have to go and meet with the brand and speak with them, and it's almost every week we're having introductions and briefings and driving new products and things. It's very exciting. But we've sort of now 50 plus brands in the UK. It makes for a very interesting market dynamic, I think.
It does. I'm struggling to keep on top of it all, to be honest, as you say, with a new brand coming in sort of every week. I guess, is there not some risk of them sort of cannibalizing their own sales? You know, you've got the likes of Cherry coming in who sit above Omoda and JQ. Likewise on the BYD front, there's sort of seems to be maybe some infighting between the brands, and maybe they're going to sort of start stepping on each other's toes.
It's an interesting question. I think at the minute, the big question is probably going to, if you look at UK in isolation, you know, how many of these brands are going to survive long term in the UK market? You know, how can we sustain all those brands? But you talk about Cherry, JQ, and Omoda. They're brands that sit alongside each other, even though the parent company is Cherry. You know, Cherry is a brand that sits alongside. It sits in its own segment. It sits in its own price point against Omoda and JQ, and they have different dealers. So the dealers that have been launched under Cherry are different. They're not just bolting onto the JQ and Omoda dealership. So from a cannibalisation perspective, you think about, you know, Cherry as the parent. If they get the market share for each three of those brands that are represented, then it's a totality of market share. And the same with BYD when they bring their premium EV product into the market. The same with that. Chang'an coming into the market. They're coming in with 2 models and 2 brands as well. So they're hitting different segments in the marketplace. But again, the big question is, how long can it be sustained? I think the one thing that is a misconception with the Chinese new entrants, they're not EVs. They're not all EVs. EV isn't their huge growth. Hybrid is their biggest growth marketplace in the UK. And that is where they're seeing the dominance in the market, because they've got some good hybrid product. But, you know.
Absolutely, yeah. It's certainly they've got some excellent hybrid plug-in hybrid products at good prices, and that's certainly
that's the thing, isn't it?
That's it, yeah. And it's opening consumers' eyes because they also have the big brands BYD, JQ, Motorshows, Cherry. They've engaged with retailers. They have a very supportive retailer network out there that's growing all the time. Retailers are introducing these products to their consumers, and consumers are taking interest because of the price, because of the design, because of the value that these products offer. And it is a very interesting proposition. Cherry is a very good example. So we've got Omoda and JQ already. Now they're bringing Cherry in. They said at the launch of the brand recently at the O2, it's very important that they have the retailer network that they do to introduce the brand and also help differentiate Cherry from Omoda and JQ. They can do it, and they can do it in their communications, but they're very reliant on the retailers doing that and having those conversations with customers. From our point of view, it's great to see these manufacturers putting such great value on the role that retailers have to play in this. And they say that retailers are fundamental to their success in getting the message out there and getting the people behind the wheel.
It's really nice to hear that, certainly from a retailer sort of relationship point of view, given that over the last sort of few years, you know, direct to consumer models have been sort of tried and tested and reversed back on as well. So knowing that some of these new entrants are actually leveraging the strong relationships that these retailers have got with customers in their sort of geographical areas seems to be proving really, really, really good.
And we talk about new entrants, we mustn't forget the traditional or the incumbent OEMs that we've got. You know, they're moving very quickly. You know, if you look at the Renault 5 and what they're doing in that market segment, you know, the Puma for the Ford now is, you know, it's part of the tier 1 on the electric car grant with the 3750.
One of only 2.
one of only two. We'll get onto that debate maybe, but they've got an order bank now going into 2026.
Yeah.
So it's triggered
Absolutely
a big order bank immediately. So, yes, we mustn't write off some of the traditional OEMs. The Chinese are coming in. It's accelerating probably some of the traditional OEMs to do things a little bit differently, come up with new product, new development and battery technology.
Absolutely. And that's going back to Munich. That's something that's very clear over in Munich. The established brands are there with their halo products, but it's also the mainstream volume products that they have as well. They've really come on leaps and bounds with some of those cars from a few years ago. Now we've got excellent EV products. We've got developing hybrids. We've got plug-in hybrids with ever greater range. It is a very exciting time at the moment because the established brands are stepping up to the challenge of China. They're seeing the competition and are responding to it accordingly with great product from themselves.
Yeah. And I wonder, kind of going forward, we've got these new market entrants, we've got these legacy OEMs creating new EVs, some really fantastic cars in the used car market. What we see now and what are we going to see, do you think, when we see that trickle down of BYDs and Cherry cars and all of the kind of new market entrants? Do we think that there's going to be almost parity in a used car market? Do we think that the legacy OEMs, maybe because they have more trust from a consumer, they might perform better? What kind of are we seeing?
I think without bringing in a sort of negative element to this, that there's going to be a period of volatility in the used vehicle market when we start to see some of these new entrant brands enter in volume as used vehicles. We've not seen entirety of what's coming new yet, and the price point that some of that product is coming.
Yeah.
So when you've got consumers that are looking at a used proposition where it's 12, 24, 36 month old, or even 48 month old, but what's coming in the new market with the latest technology, the latest battery technology, lower price points, new products, what does that start to do in the used marketplace? So, I think a lot of the conversations, whether that's with leasing companies or dealers or anybody that operates in that used car space, we'd need to keep a very close eye on that volatility and the changes within that used vehicle RV marketplace.
Well, that's it, isn't it? Because you've got, the last few years, we've really been focused on EVs and getting people into those, whether that's via sort of salary sacrifice or company car schemes. You guys have highlighted that actually recently there's been that shift to maybe more hybrid vehicles being put through the channel. I guess what's going to be really interesting is what that used car space is going to look like over the next sort of 12 months, given we are at the sort of tail end of maybe the manufacturing issues that a lot of the OEMs had through COVID. I guess, can you guys speak to maybe some of the lack of stock that the retailers have got in that sort of 3 to 5 year age group?
I think you speak to the dealer network as I do, and the data that we see, there is a shortage of that 3 to 5 year old product, and we're talking about good retailable product, and that is the reality of the consequence of, one, the shortage of pandemic supply, and then the transition to electrification. Last year in 2024 we registered 123,000 diesels. So the reality is you've got 123,000 in 2025 that are sub 12 month old. So, they're in short supply. Majority of those will be in the SUV sector, 60% in the fleet sector, 40% in the consumer sector. So, if you want in a sub 12 month old diesel, in totality, there's fewer on the ground. And that's sort of playing through up to that sort of 5 year old marketplace.
Yeah, it is undoubtedly a challenge for retailers to source these vehicles. They're getting ever more creative in how to source them and approach customers and things, boosting, maximising their retention on that front. But obviously, it's supply and demand. The demand is there, the supply isn't there, and the prices are reflecting that accordingly. It's interesting. It's also interesting because, as we said earlier, EVs haven't retained value in a comparable way to petrol or diesel. So the EVs represent an exceptional bargain at the moment. You get a lot of car for the money with EVs. The problem is that the consumer interest in EVs isn't there really, it isn't there on the new market. It needs to develop on the used sector as well, for people to be aware that these cars are a very interesting purchase. I don't know if you've got any thoughts on used EVs, Phil.
Yeah, I mean, you can go to the big headlines in terms of the depreciation over the last 24 months and how much they've dropped in terms of that percentage of cost new at 83% to 44% over that sort of 18-month, 2-year window for that sub 24-month old. But the reality is they were very heavily weighted on RV initially. So they are coming down to, as Ben said earlier, that parity. Unfortunately, at the minute, there are some EVs that are actually lower than their ICE equivalent, which, in my opinion, that's wrong. It's just an alternative fuel. But, you think about that supply market, over 80% of franchise dealers stock an EV as part of their used vehicle profile, but still less than 20% stock in independent stock electric vehicles, because there is still that risk, there is still that caution, there is still the volatility. Some of them would have been caught out with the heavy depreciation we saw sort of 23 to 2024 there, so they're a little bit nervous of going back into that EV market. They may not be as confident in terms of what they buy in and the price point, but to Richard's point, there is some very good value used EVs on the marketplace. It's just actually getting the message across to, one, the dealers, particularly independents, and two, the consumer, that actually these vehicles are a good proposition for a used purchase if you know what you're buying and your driving behaviours of what you need to charge on it.
And the battery health checks and stuff that we're starting to see come through as well. I think it's interesting, isn't it? I've been in an EV for a couple of years now. I'm sort of familiar with, the rate or I don't really get range anxiety, to be honest. Even in so I'm in my second EV now, a Tesla Model 3. I had a Volvo before that. And as long as you're sort of planning your journeys, a 10, 15 minute stop is fine. I've charged my car a handful of times, and by the time I've got to the doors of the service station, I've got enough charge to get back on the road again.
It is an education.
Yeah, it's I was just about to say, changing consumer behaviour, isn't it?
Yes.
So the education will change consumer behaviour, and that's what will then change how many people are adopting EVs, how many people are switching from ICE vehicles. But going back to that, I think it's important to, as much as EVs are absolutely the big topic at the moment, to also look at those ICE vehicles, those traditional kind of fueled vehicles, and how that's looking in the used car market, because it's a different story, isn't it, than EVs? It
is, yeah. I mean, the used car market is fairly stable at the minute. Some may say fairly firm, particularly for that petrol and that diesel product. And as you move into that hybrid or plug-in hybrid market, not quite as strong, but still fairly strong compared to that EV market. So we are seeing that there isn't that, again, whether you 0 to 4-year-old, 0 to 5-year-old products, it is fewer in the marketplace. And the dealers, as they face all the challenges in the new car market, used car market is a key revenue stream for most retailers in the UK, and for that they need product and they need margin within that product as well. So there is a lot of competition for those ready to retail, good spec, retailable, high demand products in the marketplace at the minute.
Yeah, very much so. It's particularly, as you say, with petrol and diesel, there is a lot of demand there and a lot of interest, and prices are remaining strong because of that.
Definitely some positives there. That's really interesting. I think we've also got, while we talk about used vehicles and EVs and ICE vehicles, consumer behaviour, consumer concern over affordability. We're in an interesting time as a country at the moment. How are those consumer behaviours affecting? I mean, the prices are remaining strong. How's demand? From a consumer perspective,
demand generally is fairly flat. There are still some challenges in the consumer market, as you say, with affordability. Base rate is slower now in terms of coming down. Whether we'll get another quarter of a base rate reduction in the next decision is to be confirmed. We're not going to get the 6 that we were forecasting initially.
I was hoping for a hot scoop.
It's I think when the announcement comes, it's probably going to stay firm. There's no reason for them to move it down yet. But I think, generally the consumer, if you look at the new car registration, which tells you the majority of the story, the dominance of the fleet and business compared to the consumer. And the reality is the consumer and the retail cars are where the profit margins are for the manufacturer and for the retailer. The profit doesn't necessarily come through the fleet and business sector.
That's right. Yeah, it's certainly been weak for a while now, the retail demand, and we've seen that in the numbers. Consumers are hesitant. There are undoubted cost pressures out there. And also consumers are put off by some of the messaging around electric cars that they might read, even if there's hundreds of petrol cars still on sale. Nobody at this stage is particularly being forced to buy an electric car, but consumers do seem resistant to electric cars, which is a bit frustrating because, as you know, they're great to drive. Crucially, they can save a lot of money. If you've got a home charge point, it can save a small fortune in running costs. Which absolutely, yeah. In the current climate, that is very useful. But those savings aren't getting across. There's this wall of resistance to electric cars, and it's certainly something that retailers are seeing as well. And it's very hard to get over that and start selling the positives of electric cars. So I think that may well be a factor. Interestingly, speaking to a few retailers, there are signs that it might be turning around because of the electric car grant. The electric car grant and the savings there, and the government giving $1,500 or $3,750 against a new car, that has certainly raised a lot of interest in cars. And manufacturers say that some of the cars that are included on the scheme that they've seen very little interest recently have, as we said earlier, been sold out for the rest of the year, and now we're looking into 2026. It's taken some by surprise there. So I think that's a positive message that hopefully will only accelerate and help overcome some of that resistance to EVs.
Definitely. I think from a consumer perspective, of an affordability point of view, having those grants, obviously EVs are generally more expensive, aren't they?
Yeah.
The batteries are expensive to make, and they are more expensive models. So having those grants, and it's really great to see that if you're speaking to retailers, that's actually having an effect already.
Yeah.
So it's really, really positive.
I think there was question around the ECG of the electric car grant, whether it was fit for purpose, whether it was a headline for the government. We'll get a little bit political here, Richard. But the reality is it's new money. Okay, it's not dealers' money, it's not the manufacturer's money, it's the government's money. So it's new money. And what it did do, it triggered interest in EVs, be it in the new or the used car market. It triggered interest from the consumer in general. It triggered let's say a price war, because those manufacturers that either knew they weren't going to get the grant, or they didn't even bother applying for the grant because of the complexity and the battery and the battery cells and the production and things like this, they came out with alternative offers for the consumer. So they came out and they came straight in, and if you're not going to get the 3,750, it's fine, we'll do the 3,750. So whilst they capitalise on the headline from the government and the consumer interest, they capitalise on that because they go, what, yes, fine, we've got incentives to support you. So it's triggered what it meant to do. I think the big question is what it's going to do to the used car market in residual values going forward, which is the big question in the market at the minute, long term.
Mm-hmm.
Yeah.
Perfect. So as we just come to sort of wrap up our conversation today, just wanted to sort of get your view, just a sort of quick snapshot of what you think the next sort of 6 to 12 months is going to look like. No big thing.
Big question.
Well, certainly, I think towards the end of the year, we're going to see the pressure of ZEV mandate and those targets come to the fore. It's 28% this year. It's 33% next year. Some manufacturers are on track. Some manufacturers are not, and those that aren't will be under pressure to get those EVs out the door to balance their numbers. So certainly towards the end of the month, as we go into Q4, there will be pressure there to start moving EVs, and I think that's something that we're going to monitor very carefully in Auto Market Insight. Each month we have a deals page, so it's a good way of spotting the manufacturers who are pushing those EVs. We've started marking out EVs in the deals to help retailers spot who's doing what. It's been a little quiet over the summer, but as we go through September, we are seeing more and more. And into Q4, it's going to be very interesting to see what happens with deals on EVs as manufacturers look to hit that ZEV mandate figure.
Yeah. I mean, from my perspective, there's a lot to do from the government in terms of that economic recovery. We talk about inflation, we talk about GDP, we talk about base rate. There's a lot to do in that consumer market, get that confidence back in the consumer, so that buying confidence, consumer confidence. But I think for the retailers, retailers have got a lot of plates to spin at the minute as to what they do. I think as we go into Q4, it's going to be a challenging period as we enter Q4 for the reasons Richard's saying there. The manufacturers are going to be pushing very hard. There isn't going to be a great deal of used vehicle stock in the marketplace. So, that's going to start to come as we enter 2026, because if you think about the life cycle when products started to come back into the market post-pandemic, 2026 is when you'll start to see the returns of those vehicles. So you see the uptick from sort of 2022 into 2023. As we accelerate out of the shortage of supply and the manufacturers start to flood the market with product, those are going to start to come back in 2026. So we're going to see product coming into the market in 2026. But I think short term, 6 to 12 months, there's going to be a little bit more activity in the M&A space. So we're going to start to see a little bit of sort of shift as to which dealers represent which manufacturers. There'll be a little bit of international investment coming into the UK market. You'll see some further consolidation of the dealers as well as we move through. It's going to be watching some of these new entrants as to what they do now. How much of they can take in terms of market share from the more traditional OEMs as we move sort of out of 2025 into 2026.
Absolutely.
Perfect.
Lovely to speak to you guys today, and really, really interesting points. I think it's an interesting time to be starting an automotive podcast.
Definitely.
At the
Absolutely,
moment.
yes.
And really, really thank you very much for joining us.
Thanks for taking the time to sit down with us.
Yeah, thank
You're
you.
welcome. Thank you.
So thank you for listening today, and thank you, Philip and Richard, for joining us as well. We have an email. So in our show notes, if you'd like to email us to get in touch, suggest a topic, or if you work in automotive and you'd like to be on the podcast, let us know.
Indeed. Follow us wherever you get your podcasts. Alternatively, you can watch us on the Cox Automotive Europe YouTube channel. So feel free to follow and subscribe for more.
And thank you very much. We will see you next month.
Thanks.